Welcome to the UTI Asset Management Company Limited Q4 FY23 earnings conference call. From the management, we have with us Mr. Imtiyazur Rahman, CEO and Managing Director, Mr. Surojit Saha, Chief Financial Officer, Mr. Vinay Lakhotia, Head Operations, and Mr. Sandeep Samsi, Head Investor Relations and Corporate Communications. We also have with us an investor relations team from Adfactors joining us on this call. As a reminder, all participant lines will be in the listen-only mode, and you will be able to ask questions after the opening remarks conclude. If you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Please note the disclaimer mentioning these risks and uncertainties are on the disclaimer side of the investor presentation that has been shared earlier. I will now hand the conference over to Mr. Imtiyazur Rahman for opening remarks. Thank you, and over to you, sir.
Thank you very much. Good afternoon, everyone. Thanks for joining us today to discuss our operational and financial performance. The year witnessed some turbulence globally. The major economies world over are taking measures to tackle the inflation in the best possible manner. It is also encouraging that these economies are taking all possible measures to effectively manage the rising interest rate scenario and the challenges being faced by the financial sector. The Indian economy, too, remains robust, receiving recognitions globally for our economic resilience and the growth prospects. Our mutual fund industry also has demonstrated resilience and achieved fast growth. Various factors like rising household savings, broader geographical reach of financial products in Tier 2 and Tier 3 cities, and growing share of mutual fund in the financial savings are positive factors that will help drive the development of the sector in a significant manner over the next decade. The year was characterized by volatility in terms of inflows and outflows from mutual fund schemes. However, the flows in the equity funds have been positive, and so as the SIP flows. The SIP contribution in March 2023 was rupees 14,276 crores. The positive inflow into the equity funds are testimony to retail investors' confidence in the Indian equity market. And these investments are supporting the benchmark indices amidst investor sentiments. The total asset under management of UTI Group registered the growth of about 15.4% over the corresponding quarter of previous year and stood at rupees 15.56 lakh crore as on 31st March 2023. This is a figure of the entire group. Friends, in UTI, we are focusing on the 5 key objectives. First, to be among the best board-governed companies. Governance is one of the most important pillars on which UTI stands. 6 out of 10 directors on the UTI AMC board are independent directors. UTI AMC board, along with the boards of all our subsidiaries, have women representation. 2, building a A-class human capital. Realizing the significance of human capital in an investment organization like ours, we have been investing in acquiring, building, and retaining talents with focus on gender diversity. Accordingly, 32% of the hires in the last 4 years were women, and currently 27% workforce is made up of women employees. We have initiated measures for career facility for our employees. We have made significant investments to create a state-of-the-art infrastructure for our investment team. We are also built capabilities for our team. We have created customized training and development program for employees in different levels. Third, digital-first organization. During the year, we saw a very good response by investors and distributors in respect of our digital sales and digital engagements. our digital campaigns have resulted in influencing sales across all touch points of UTI AMC. We are in the final stage of relaunching superior digital asset website and mobile app for our partners and investors. 4. Geographical spread and financial awareness. We are planning to open 29 new offices during the financial year 23-24 to reach newer markets across the country. Our investment team has been traveling to various locations all over India to spread awareness about the investment philosophy and processes, considering the potential of the B30 cities. We already have 108 out of 166 UFCs in these locations. Finally, deeply embedded ESG compliance framework. We have formed a ESG committee of the board which provides guidance and oversight. We have in place a robust ESG framework covering all relevant aspects for planning and effective implementation. Friends, we are using 100% renewable energy for our corporate office and have received a green energy certificate. During this month, we also published our first sustainability report. Under our social initiatives, our CSR project supplements our commitment to ESG for social upliftment and conservation of environment. Our subsidiaries for retirement business, alternative investment products, and offshore funds are growing with expansion in operations and business. I would like to share some highlights about our group companies. UTI International, which is a 100% subsidiary of UTI AMC, has formed a new subsidiary in the United States named UTI Investments America to capture the opportunity in North American market. In UTI Capital, we are building a strong team for opportunities in the alternative business space. We are also planning a series of fund launches such as Real Estate Opportunity Fund and others in the alternate segment and are filing necessary documents with the regulator. While the company is fully capitalized, we have recorded a net loss of rupees 3.3 crore due to the various investments being made to build the business. UTI RSL, the retirement business in the country is a very big opportunity, and we have plans to expand our team and open our new point of presence across the country. The business has been growing rapidly, and we aim to capitalize further on the same and enhance NPS business. Friends, to summarize, we initiated several progressive measures like building resources up in sales and investment, enhanced engagement of fund managers with our distributors and partners, conducting investor awareness program, launching learning and development initiative for employees, enhancing focus on KYC compliances, upgrading infrastructure of the company, and as well as its subsidiaries. As one of the positive developments, UTI was appointed as one of the asset managers for EPFO's investment ETF for a period of 3 years, and Central Public Sector Enterprises have also enabled a policy to continue their investment in all mutual funds, including UTI. In the financial year 23-24, the participation of the retail investor in Indian growth story is likely to be the key factor for the Indian capital market. Friends, for this call, I have with me my distinguished colleagues, Mr. Surjit Saha, Chief Financial Officer of the company, Mr. Vinay Lakhotia, Head Operations of the company, and Mr. Sandeep Shamsi, Head Investor Relationship and Marketing, to work with me. I will now hand over to Mr. Sandeep Shamsi, who will give the details of UTI MF's performance. Over to you, Sandeep, and thank you.
Thank you, sir. I will first take you through the UTI Mutual Fund's performance during the fourth quarter and for the full year ending FY23. UTI Mutual Fund's performance. The total assets under management for UTI Group registered a growth of about 15.4% over the corresponding quarter of previous year and stood at rupees 15.56 lakh crore as on 31st of March 2023. For UTI AMC, the quarterly average AUM as on 31st March 23 stood at rupees 2,38,791 crore, up by 6.7% year-on-year against the industry growth of 5.6%. As on 31st of March 2023, our market share has increased to 5.89% for the quarter ended. The quarterly average AUM for index and ETFs recorded a year-on-year growth of 33% to rupees 82,871 crore for the fourth quarter. Our equity quarterly average AUM for the quarter ended March 23 stood at rupees 70,494 crores, rising by 2% as compared to the quarter ended March 22. UTI was able to capture a market share of 8.5% of the gross sales of the industry during the fourth quarter. UTI Mutual Fund recorded a net sales of 1,208 crores for the quarter 4 of the financial year 23. ETFs and index funds record a net inflow stood at rupees 1,100 crores. Hybrid fund witnessed a net flow of rupees 719 crores for the quarter. During the quarter under review, UTI added 36,000 folios, taking up the number of live folios to 1.22 crore as on 31st March 2023 from 1.19 crore as on 31st March 2022. Our SIP AUM witnessed a growth of 17.5% over the corresponding quarter of last year, reaching to rupees 21,509 crore as on March 23 from rupees 18,311 crore as of March 22. During the quarter, our number of SIP accounts rose by 2.14 lakh, taking the total number of live SIP folios to 25.2 lakhs as of 31st March 2023. The SIP inflows for the quarter stood at 1,667 crores, rising by 12% year-on-year, with the average ticket size being rupees 3,262 for March 23. 22% of the monthly average AUM for March 23 came from B30 cities, while the industry average stood at 17% in terms of its B30 market monthly average AUM. The weighted average AMC yield was at 35 basis points for the quarter ended and was 37 basis points for the full year FY23. Now I come to UTI AMC's financials. During the fourth quarter, the company posted a consolidated net profit of rupees 86 crores, recording a growth of 43% quarter-on-quarter and 59% for year-on-year. For the financial year 23, the consolidated net profit stood at rupees 437 crores. For UTI AMC standalone, the PAT of UTI AMC standalone in quarter 4 FY23 was rupees 98 crores, reflecting a growth of 31% year-on-year and a decline of 10% on a quarter-on-quarter basis. For Retirement Solutions Limited, the UTI Retirement Solutions, as we know, manages the NPS corpus for the government and the non-government sector. The AUM for UTI Retirement Solutions has increased by 19.2% on a closing basis to rupees 2,40,709 crores in quarter 4 of FY22 and has a share of 26.78% of the industry AUM. The profit after tax of UTI RSL is at 46 crore, an increase of 10% as compared to the corresponding quarter of last year. UTI International Limited. UTI International has an AUM of rupees 21,703 crore as on 31st March 2023. Our international clients are across more than 35 countries. These are primarily institutions, pensions, insurance, banks, and asset managers. One of our flagship funds, the India Dynamic Equity Fund, domiciled in Ireland, has an AUM of $852 million. UTI International J. Safra Sarasin Responsible India Fund, an ESG compliant fund, has an AUM of $75 million. UTI Innovation Fund, launched in the first quarter of this year, of the last financial year, has an AUM of $19 million. The management fees of UTI International is at rupees 129 crores, an increase of 1.6% year-on-year from 127 crores in quarter 4 of last financial year. UTI Capital Limited, as Mr. Rahman has highlighted, we are building this business. UTI Capital, it has a total AUM of rupees 1,707 crores, currently managing active debt funds like the UTI Structured Debt Opportunities Fund 1, which was launched in August 2017 and closed in May 2019 and has an AUM of 137 crores. Currently, the fund is in exit mode. UTI SDOF2, which was launched in September 2020 and has an AUM of 506 crore. The fund is currently in fundraising as well as investing stage. SDOF2 has a well-defined ESG policy and strategy. UTI Multi-Opportunities Fund, launched in March of 2022, has an average AUM of rupees 763 crore. Currently, the fund is in investing stage. UTI SDOF3, which was launched in September 22, has an AUM of 506 crore and the fund is currently in a fundraising as well as investing stage. The employee cost of the organization. The employee cost of the group for the financial year 22-23 was 415 crores, witnessing an increase of 2% over the last year. The employee cost of the group in quarter 4 of FY23 was 107 crores, witnessing a decrease of 7% year on year as against an amount of rupees 115 crores in the quarter 4 of FY22. I would now request the Managing Director and CEO for his concluding remarks.
Thank you, Sandeep, for sharing operational financial highlights on this call for the fourth quarter and financial year 2022-23. With this, I would like to open the forum for your questions, and thank you for joining this call today. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Swarnabha Mukherjee from B&K Securities. Please go ahead.
Hi, sir. Good afternoon. Thank you for the opportunity. 3 questions from my side. On the yield, so there has been a quarter-on-quarter drop in the yield. So just wanted to understand what would be the factors driving that. Second question is in terms of the other expenses. This had also seen some amount of increase. So if you could highlight the reasons behind that increase. And thirdly, in terms of the international business, the AUM for the business is now around 21,000 crores. So it has seen some reduction. So is this market or anything else to read into this? If you could highlight that would be my 3 questions.
Hi, this is Vinay here. So I'll take the questions on the yield, and Surojit will take the questions on other expenses as well as the international piece. On the yield part, there's a marginal decline of yield between as compared to the last quarter of almost around close to around half a basis point decline. Again, primarily because of the decline in the yield under the equity category, where the yield has actually fallen by close to around 2 basis points during the last quarter. Again, primarily 2 reasons, because the fresh inflows are coming at a lower yield as compared to the stock AUM, and plus close to around there have been a redemption of the older AUM which has been carrying a slightly higher yield. So these are the 2 primary factors because of which the yield has actually come down marginally by close to around half a basis point as compared to the previous quarter.
Surojit.
Sir, just a follow-up. Can you indicate what is the yield you are seeing on the stock AUM and the fresh AUM on the equity segment right now?
So on the stock AUM, the yield is close to around on the equity side and the equity and the hybrid side, it is close to around 75 basis points. I can't give an indicative numbers on the fresh AUM because the distribution mix between the distributor and the AMCs varies depending on the categories of the IFAs and the distributor. But normally the distribution mix in the range of around 50 to 80% of the total expense ratios of the fund. So indicative range won't be possible, but that the indication that we have been providing in the last few calls as well.
Okay. Okay, got it, sir. Yeah, if continue on the next slide.
In respect of the other expenses, the increase is around 16 crore from 56 crore in Q3 to 72 crore in Q4, which includes some of the expenses like an amount of 4 crore is towards CSR actual outflow of cash. It is pertinent that CSR amount has to be booked on actual outflow and it is not based on the accrual basis. The actual payment was in the last quarter, though there was a commitment towards CSR in Q3 FY23. There was no actual payment since the amount was not requisitioned by the concerned institutions to whom we had committed. The same has been accounted in the last quarter and reflected in the increase in cost. After coming out of the COVID situation in the last year, our business operations significantly increased with business travels, visits of the fund managers to different centers for the purpose of creating sustained growth in business and creating awareness about our investment philosophy across the country. For the first time, we conducted a sales meet in which the entire sales team across the country participated for the strategic sales discussion, and this has reflected in the increase of cost of 3 crore, which includes the travel as well as the related expenses for this initiative, which we consider as an investment for the future. During the quarter, we also spent 2.5 crore for the digital initiatives, security of the business application and disaster recovery systems across our applications. Further, the subscription fees for index fund have increased corresponding to the increase in AUM. The subscription fees linked to the quarterly average AUM, Nifty banking banking ETF AUM increased significantly from 70 crore to rupees 2,500 crore over the year. The Nifty index fund AUM increased from 6,300 crore to 10,000 crore. And momentum fund went up from 1,100 to 2,200 crore. In view of this trend during the year, there is an impact on Q4 also in view of the linkage of the index fees to the AUM. The quantum of the fees paid during the quarter also increased by 1.5 crore. Further, there was an increase of 2 crore in the PFRDA fees paid by UTI RSL, which is in tandem with the increase in the management fees. UTI RSL has started business promotion expenses for increasing the NPS business by reaching out to the pan-India opportunities. And lastly, towards the promotion of ESG in our company, we took membership of Sustainability Accounting and Standard Board, which is SASB, an internationally leading organization, and which did the sustainability and value reporting, which has an expenses of 1 crore. These are the major expenses. And out of this 16 crore, around 50% will be on one-time expenditure and around 8 crore will be a recurring expenditure.
Also the Bloomberg expenses of 1.5 crore.
And Bloomberg expenses, because last year also we have added few terminals and we said that we initiated Bloomberg terminals across our investment fund managers. So there was an increase of 1.5 crores.
And as well as the depreciation in the currency also impacted. Yep.
Sure. Yeah, just a follow-up, sir. This index-related charges we are paying to NSE.
NSE as well as Asia Index, that is the BSE charges, both.
Okay, and how is it accounted for? Is the whole charge paid in 4Q every year or staggered?
It is done every quarter. So this particular quarter, it was around 1.5 crore, which is an increase compared to the last year's last quarter.
Okay. And in terms of the RSL business, the PFRDA charges, the increase that you mentioned, has that come because our AUM has increased and so we continue?
Of course. Yeah. AUM has increased. If you see over the year, full year in the business, AUM has increased by around 40,000 crore. And as you know, out of the 5 bips is accounted as a sale of service and 1.5 bips is accounted as an expenses.
Right. Okay. So that incremental 40,000 crore part of that has come this.
Yeah.
Yeah.
So, and lastly, in respect of UTI International AUM, actually we have few funds which are periodic funds like Phoenix Fund. 2 Phoenix Fund has matured during this particular period. One is a 1500 Phoenix Fund, which is a B19, then another 2900, and another one is around 1600. So totally around 6,000 crore in respect of that. And India Dynamic Equity Fund, which is a leading fund for the international business. There was a repurchase, redemption pressure was there. So it's around 2,000 and the fund is doing well. And across globally, the growth stocks have not been performing. So we expect a turnaround, and next year, hopefully, this will be. And Mr. Rahman has already informed during his speech that we have opened office at Paris and Barica to improve our international business.
Sure. In IDF, the redemption is coming from us only, because I remember that you mentioned last quarter you had redeemed.
We have not redeemed yet. Our seed capital we have not redeemed. This is one of the HNI investors at this market level who has invested much long before when the scheme was launched. So he redeemed his investments. We have not done yet. We are waiting for opportune moment, and we'll definitely try to reduce our exposure in this seed capital.
No, but redemption is very minimal. Is more on the currency, which is depreciated by 6-7%, and 17% is basically the performance issues. But redemption is only to the extent of 5.5-6%.
Okay, sir. And out of this 20,000 crore, how much do we hold right now, our investment?
Our investment is around 7,000.
Okay.
7,000 is the total IDF size now. We should be around the 350 crore type.
Yeah, so I mean, you invested
Mr.
350 crore.
This is the operator.
Sure, I just had a final follow-up on this. Nothing.
Sorry, it is around 31 crores. Sorry.
So your initial is around 31 crores. Initial seed investment.
Yes,
and that has gone up to how much? That is what I wanted to know.
Yeah.
Sorry, what at the current level, how much is the current?
Initially we invested 25 million. It went up to 36, and we have already repurchased around 6 to 7 crore. And today the outstanding figure is around 30 crore type.
Got it. Very helpful, sir. Thank you so much. Thank you.
Thank you. We have the next question from the line of Viraj from Simple. Please go ahead.
Yeah, I just had two questions. First is on the book, so if I look at the equity and the hybrid book, can you just give some color into what share of book is now new flow, the one which comes in a much more higher sharing with the distributor? So, can you just give some perspective?
So, less than 20% of the overall book is actually the old AUM, and almost 80% is the new AUM only.
Okay, so basically then going into FY24, we should see the yield should be more or less stabilized for us, because now the book is by and large the new.
We expect until unless there is a significant redemption on the older AUM, we should see some stabilization in the yield. But the overall yield will still have a drag down effect because of the growth under the ETF and the index category.
Okay. And second question is largely in terms of the competitive dynamics and, so if I look at a year back, we had, and not just us, but the industry had seen a very high competitive pressure, and there was a significant increase in sharing with the distributor. How is that, if you can just provide a perspective in terms of the competitive landscape, and especially in sense of pricing and sharing of, TER with the distributor and channel. So has that normalized, or has that corrected, or that is still elevated?
No, I think it has more or less become a standardized distribution ratio only. As I stated earlier, most of the AMCs are sharing in the ratios of around 50 to 70. Some may be sharing a slightly higher. So depending on the distributor category, whether he's an individual IFAs or the larger national distributor or a private or a foreign bank, the ratios are changing. I don't think the competitions has anything to do with that. I think over the last 2 years or so, the pricing has become more or less the standardized norms only as far as sharing is concerned between the manufacturer as well as the distributor.
Okay, and just one last question if I can squeeze in. On the expansion part, what I heard, correct me, you said that, we'll be looking at adding another 29 branches. Now, if you look at the spread of our current network itself, and based on the last few calls and what you understand, there's still a good amount of throughput, potential throughput which we can further leverage from existing branches itself. So compared to the potential, the AUM per branch or the turnover at the branch level is still relatively lower than what the potential could be. So what is the thought process behind adding another 29 branches when we have all the, we still have scope in terms of further increasing the throughput in existing branches? And in relation to the digital physical mix expansion strategy we talked about over the last 1 or 2 years.
So Viraj, good question. This is not an either or strategy. This is an and strategy. So while we look at different markets, we realize that there is enough amount of potential in the top 30 markets, which we have also mentioned that we have work to do and we are continuously working with our partners in those markets. However, the India or the Bharat as it is colloquially called is growing and we see a lot of potential in these smaller markets also. Now there is a huge amount of education which is coming in this markets and there are people who are ready to work in this market. So that's why we want to open and tap these markets which has got the potential for us to grow over the next maybe 3 to 5 years. They will not be immediately mature enough, but over the next 3 to 5 years they will give us good returns. The second part is, yes, we are also focusing on the digital part, but India is still not completely digital. It's still a phygital world where, in India, people, while they want to use digital mode, they also look at physical modes. So you have to follow an and strategy. You have to focus on the top 30 cities. You have to look at beyond 30 cities. You have to open in the tier 3, tier 4 cities, as well as you have to have a very clear digital strategy to be present, omnipresent across whether it is on the website or the app or any other mode through partners.
So what kind of OPEX we will be looking to incur for these 29 and typically what is the gestation period in terms of the branch to start contributing in terms of profitability?
Yeah, we are expecting it around 1.5 to 2 years it should break even. We have plans and based on the potentials what we already have, we are opening these branches. So our existing plan is to open these 29 branches and it should break even by 1.5 to 2 years.
Investments, sir?
Investments around for these 29 branches, it will be around 3.2 because we are expecting to open around 500 square feet to 600 square feet area. The total restructuring is what we are doing in respect of our big offices which we have.
Viraj, if I can, I'm Rahman.
Hi, sir.
Two distinct strategies which we are working on. We had a strategy meet here in Jaipur and we are attending this call from Jaipur. One is the top 8 cities. It is our key focused area. And second is rationalization of our branch offices. So earlier we opened a lot of branch offices, bigger in size, which is no longer required. So we are going to rationalize all our branch offices in this financial year, and therefore we are also here to expand. The saving which will come out of those rationalizations will be good enough to meet our expansion requirements. So we are not expecting much pressure on our P&L account other than 3 to 4 crores which Surajit has highlighted to you.
Okay.
So far as digital strategy is concerned, we are investing in our digital strategies. Number of team which we have is now a 14 members team we have in digital space. We may hire more people in digital and make particularly in the data as a data analyst, and also to give in a state of art, IT as a digital assets for our investors. As you know, the young Indians, they would like to interact or make investment digitally on app through. So we have 3 different strategies. One, top 8 cities. Second, expansions. We need to go beyond because the beyond 30 cities are doing a terrific job now. They are growing, and as well as the digital. All 3 cylinders will be fired.
Okay, I'll come back in queue. Thank you.
Thank you. We have the next question from the line of Lalit Deo from Equirus Securities. Please go ahead.
Yeah, hi, sir. Good afternoon. So just I have one question. So like in the last 2 to 3 quarters, like we have been seeing a market share of about like more than 8% in our gross sales, but it has not been reflecting in our net sales number. So now within this 8.5% market share of gross sales, could you bifurcate it between like how is the market share in gross sales in like an equity segment or a hybrid segment, and what are we doing to improve our net sales number as well?
You want the gross sale percentage across scheme category. Is that question correct?
Yes, sir.
Okay. So for quarter 4, roughly around 2.5% of our equity, the share of wallet for equity is close to around 2.5%. ETF is around 9%. Income fund 4.5%, and liquid fund is actually 9%. So on a weighted average, roughly around 8.5% is our share of wallet as far as the gross sales is concerned.
Sure. So just to only follow up on this, so like now within this equity segment, like we have been on around 2.5% market share. Now in terms of AUM market share, we are at about like around 5%. So like how are we looking to improve or catch up on the market share gain going ahead? Like what are the different strategies we are looking to deploy over here?
So the focus is actually on performance, and definitely as and when if your fund is performing, it should drag the sales. So the focus strategy is that we should have a 3 to 4 core strategy among the equity fund, deliver superior returns to our investors, and the outcome will be the sales number.
Thank you.
Thank you. Before we move to the next question, we would request participants to limit their questions to 2 during the initial round. We have the next question from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi. Just a few questions. Firstly, on the ETF portfolio, what will be the share of EPFO in our ETF portfolio overall? And secondly, with respect to equity market share, while fund performance is a focus area, but any other strategies with respect to distribution that you guys are working on in order to kind of really recoup the market share in terms of flows? And just adding to that, what would be a flow market share?
I'll answer the ETF part. So the ETF part, in terms of gross inflows, roughly the EPFO share is just now 50%. Remaining 50% are coming either from retailizations of index funds, as well as we are selling to ETF funds to many of the corporate fund houses as well. On the overall AUM, I don't have the exact number, but it could be very well in the range of around 60 to 65% of the overall number will be the EPFO mandate. But maybe I'll come back to you with a specific number on the overall book AUM.
So far as sales, you want to say? Please go ahead.
So far as the sales strategy is concerned, yes, we realized that one of our strategies, which was on the growth stocks, has not been doing well because growth stocks overall have not been doing well. But we have been positioning our flanking products in this category. I don't want to take names, but we have enough number of strategies which are in place to tide over this issue. Secondly, we are again approaching, as we mentioned earlier, that we had a long discussion, and we are again approaching our distribution partners with these new strategies for marketing the product. So we are hopeful that with all of these, we should be able to get a good share of our market in the equity funds.
Our products are on the platforms of banking platforms. We are in continuous touch with our distributors. Our sales team is completely engaged, and it is our focused strategy today to work with the sales team to basically regain our market share in the equity side.
And on the SIP?
Hello?
Yeah, Prayesh.
Hello. Yeah, on the SIP flow market share, and how do you plan to increase the same?
Yeah, so our gross inflows in SIP for the month of March were about 573 crores, and our average ticket size has been, as I mentioned, around 3,262 crores rupees. And the SIP closing SIP count is around 25,18,000.
So the market share on the gross sale is close to around 4.2 to 4.3, and the market share on the overall book AUM is close to around 3.5 to 3.6%.
All right. Thank you so much.
Thank you. We have the next question from the line of Dipanjan Ghosh from Citi. Please go ahead.
Hi. Just two questions from my side. First, if you can give some color on the possible expense drag on FY24 or 25 because of the new fund launches in your subsidiaries, mostly UTI International. And second, while you give the equity gross flow market share, if you can give some color of the similar market share on the equity side across the major channels.
UTI International launch of any fund, we are expecting some expenses in the UTI International balance sheet. That will be the legal cost. We don't have the right number at this particular point of time, but we are also in the process of hiring the team for our US market, and all legal expenses towards registration will also be there. Exact number I don't have at this particular point of time. So far as the launch of products in UTI Capital is concerned, we are not expecting much expenses to be incurred in launching of the fund, because this is only the license cost or document filing cost which we need to pay to SEBI, which is not very high.
Sure. And on the second question, your equity flow market share maybe across some of the largest channels?
Yeah, so if I look at my share across various channels, across the banking channel, my equity, and this is this is pure equity, does not include ETF and index, is around 2%. While from the other MFDs, it is around 7.5%. So equities, these are the main two channels.
Just to clarify, this is on AUM or on gross flows?
This is on the AUM.
Okay. Would you like to get some color on the flow side also?
I don't have the numbers on the flow side. Maybe offline I can share it with you.
Sure. Thank you and all the best.
Thank you. We have the next question from the line of Abhijit Sakhare from Kotak. Please go ahead.
Yeah, hi, good evening. First one is on expense line. How should we look at growth in staff costs and non-staff costs for FY24? Is there some indicative range that you would like to give?
Very difficult to predict the resumption for staff cost.
The staff cost. Generally, as per Hewitt report, the financial services may give increase to 9 to 11%. We are not expecting to give such a raise to our employees, but we will also have advantage of the retirement during this financial year. So our staff cost is expected to grow in the same line as it is this financial year, around 3.5%, because we are not expecting to give the 10% or 12% raise to our employees.
Got it. That's useful. And on the non-staff, because I think that's where you'll have a little bit of a...
Non-staff cost, as our CFO Surjit mentioned, that there is a CSR expenses as we grow and make more profit, which continue to be there, but a one-time expenses of sales meet which we had, where we call the entire sales team to Mumbai, and we have sales meet, these expenses will not be there. And travel will continue to be there. We don't know how the currency will behave. And this year, investment in the IT will be less than the previous year. We have already incurred a lot of expenses in revamping our IT assets. So these one-time expenses will go. but the expenses towards the CSR will again come because of the profit which we have and as a regulation which we need to use it to meet the regulatory requirements. NCS expenses is a variable expenses, and it is related to the income that is charged to the profit and loss account of the retirement solution. One-time expenses will be eliminated. Particularly also the renovation cost which we have. We may have the renovation cost because our building in UTI Tower, we have a plan to renovate 2.5 floors more, and that there will be some expenses.
Got it. So this year, I think we closed the year with overall annual expense growth of 6%. And again, for next year, you're looking at few more initiatives that will add to costs and some savings as well. But I do think that going ahead, you can do better than this for.
We have a specific target to basically optimize our costs and to ensure that the costs are not increased. If you recall our data for the last 6-7 years, we have been outperforming the inflation. We will continue to do that. And we'll keep you updated on a quarter-on-quarter basis as we go along and to share with you our cost management strategy. But we are not expecting much rise in the administrative expenses size.
Got it. Secondly, on the flows, on the hybrid side, we've seen continuous net outflows. So probably that is linked to how the fund performance is shaping up. So fair to think that pressure will remain. Is it driven by the more retail IFA channels, or you've seen funds kind of being removed from focus list or recommendation list? So if that's the case, I think this pressure can sustain for a few more quarters. So how should we look at the net flow number for the next few quarters?
I would like to submit that none of our schemes have been removed from the list of the distributors. Vinay will give you the further details, but also on a strategic perspective, we don't have the BAF product with us. We have submitted our application with SEBI. We are expecting the approval from SEBI, and we will launch the BAF product. That will help us in raising funds.
Yeah.
Vinay, over to you.
Yeah. So in the hybrid category, just want to clarify, within our scheme categorization, the arbitrage is being categorized under the hybrid fund category only. The arbitrage fund is more actually a liquid fund in terms of nature, and because of the yields that arbitrage fund that has been receiving, there have been a lot of redemption pressure. So pure hybrid fund, if you see, the net sales are more or less, it's actually a flattish. It's not a positive. Net sales are not there, but we are quite hopeful with the new NFOs of Balance Advantage Fund that is expected close to around the beginning of the next quarter or maybe the end of this quarter. The inflows under the hybrid fund should actually improve.
Got it. Thank you.
Mr. Sakhai, yeah, thank you. Ladies and gentlemen, we will take one last question from the line of Gaurav Jani from Prabhudas Lilladher. Please go ahead.
Thank you, sir. Firstly, a question to Vinay, sir. Sir, could you quantify on a stock basis FY23 versus 22? What would have been the reduction in equity yields?
22 versus 23, it will be close to around 7 to 8 basis points.
Understood. No, just trying to sort of, get your sense. So the fall in equity yields in 24 and 25 would not be as sharp, right?
Again, Gaurav, depend on the redemption analysis. If the older AUM is getting redeemed at a faster pace, maybe the yield drop can be sharp, but that will provide respite for the coming financial year. Otherwise, it will be a marginal decline.
So, and stock basis FY23, sir, if you could quantify the equity yields?
23, FY22, 23?
Yes, for the full year, I mean, average yield in equity.
Close to around 76 basis points.
Understood. Secondly, did we launch any equity NFOs in FY23? And if you could share the amount, please.
Sandeep?
Yeah, so we launched a number of funds, but not directly in the equity category. We launched ETFs and we launched the fund of funds.
Understood. Thirdly, sir, just a question to Sandeep, sir. Sir, on a YY basis, the BND share on the equity side is about stable at or static at 12%. What measures are we taking to actually increase that at a faster pace?
You're talking on the banking channel, Gaurav?
Correct.
Yeah, so as Mr. Rahman also mentioned that our products are listed on various banking channels, and we are in continuous touch with the distributors as well as the distributors at the banking end to promote our products. This is again, there are two things. One is the performance of the fund. So whenever there is a good performance of fund, automatically the inflows also improve. And also the level of interaction and relationship which has been maintained by the relationship manager of the banking channel. So we are trying on both. While, as I mentioned earlier, that some of our funds, the strategy was different and we couldn't capitalize on that in the last year. But we have now got flanking products to, support these funds. And our people are in continuous touch with the distributors as well as the bank. And we hope that with these measures, we will be able to improve the share.
So understood. Just last bit, a slightly different question on the cash side. So this year, sir, there is a fair bit of increase in the payout from about 50% to about 63% on a console level. Fair to assume this would be maintained, or the payout would increase actually?
Yeah, you are correct. Like 21, we have given 48% and of the group, and in 22 we have raised it to 63.21, and we hope to maintain this payout ratio, or we'll improve it definitely.
It depends upon the board decision, time to time.
Understood. That's it. Thank you very much.
I just want to clarify one point to Swarnabho of BNK. The total out of the 7,000 crore, the seed capital investment today is 265 crore.
Okay.
Thank you. Ladies and gentlemen, due to time constraints, that is the last question. I would like to hand the floor back to the management for closing comments. Please go ahead.
Thank you, and thank you very much. I also like to thank my team for their participation, and thanks a lot. Thank you.
Thank you, ladies and gentlemen, for your participation in our Q4 FY 22-23 earnings conference call. In case of any further queries, you may get in touch with the investor relations team at Adfactors, or feel free to get in touch with us. We look forward to interacting. Thank you.
Thank you. Thank you, everyone.
Thank you.